Okay, a lot have been battling on using our scanner. So, how to use the scanner? Of course, you study the script to understand some of those ground rules, but basically, what are my steps? First of all, we'll say open a chart on daily time frame to see the candle close and open and all of that. So you just want to have an idea, right? What the market is doing. Now, this is good. Today, when I came, this was the candle that was there. So that means the previous day closed bearish, right? All the days behind all closed bearish. But it's not about being bearish. So I love a candle with momentum so that I can make decision. So like now, I can today's candle, and I saw this candle closes bearish and below the low of the previous day to it. Then I know that for today we are bearish. But that's not all. So you should be putting mind towards more of selling. Now, what do I do next? So number one is just check the candle. So to get the daily bias, bullish or bearish, just to have an idea. Now, I'm not teaching you detail about market structure and all of that, but this scanner give you a lot. Okay, so look at your scanner to come for the day. This is where the major support is. That's the key level. So now, once I check that, the next you should do, they say you should go to, right? Step down to 4 hours or 1 hour. Okay? So the meaning of this is that if you go to 4 hours, so let's step into 4 hours. Now, do you know what we're looking for in 4 hours? Do you know what we're looking for in 4 hours? We're looking for what we're looking for in 4 hours is simple. We're looking for a buy signal or a sell signal. Now, this was previous day on. So you neither say, so there was no buy or sell signal. But how there was no? But if there is, then it's very simple. So listen to me now. If you see a buy or sell signal on 4 hours, you have to go straight down to you have to go straight down to remember when you come. So as a beginner, well, I'm not saying you are a beginner because it all depends on if you are a beginner. So let me say it that way. If you're a beginner, so for those of you who are experienced, you know what to do. I don't need to teach you what to do. So if you're a beginner, don't have too many instruments you want to trade. Okay. So let's say you have list of about 5 instruments. So first is that if I come on a daily basis, I want to see live in the previous day candle, okay, to be able to say, okay, today will be more, the momentum will be good. Remember, this your scanner combines right trend, structure, you can see L, L, and all of that. If you don't know how to enable it, just go to your scanner, right? If you don't know how to enable it, maybe it was not enabled when you install. Of course, it will not be enabled when you install. So just go straight down and then go to input and then click on show pivot point. Okay. Then if you want to have your trend line like 50 moving average, you can just enable it, depending on what you want. Okay. So maybe just to have an idea, is this market a downtrend or an uptrend? So you know that this is a bearish market. So now, very simple. You have gone for the daily time frame, all right, to see the momentum of your candle, right? It's actually bearish and it has good life. Okay. The market tried to bounce back, so but it's still very bearish. So then you go to 4 hours. 4 hours is for your structure. And I say if you get a signal, this was yesterday's signal, so it was not today. So when you look at it, you probably weren't able to see where to sell from. So you go to 1 hour. Okay? Now if you look at 1 hour, I think you neither not even see where to sell from. Okay, because I'm not teaching you structure now, I'm not teaching you anything. You're only looking for let my signal come for me. So 1 hour you didn't find. So perhaps if you don't find, don't complicate issues for yourself, except you want to just follow the one that was existing before. So if you go to 30 minutes, now this time around you find one, perhaps here. So this 30 minutes that you find here, this is good. Now you find 30 minutes here. Look at this. Now let me go. On 30 minutes, you probably can go to 5 minutes, 3 minutes, and all of that. So if you found 1 hour, if you found on 30 minutes, look at it. So I'm going to go to maybe first of all, 5 minutes. Now, when you go on 5 minutes, what do you have? So probably when you open it, the market was already bearish, and of course, when it give you sell. So maybe when you find the market has already told you to sell here. So now, what you want to look at your key levels, look at your resistance, look at your support. At that time, here was not red, will be green. Here will be green. So you will now say, okay, let me take this signal. Perhaps the market has gone up, all right, has gone down. You just wait for a pullback and then find an entry. Some people can still just enter into the market because, they stay fresh. All right. So if you cannot find appropriate one, you can go to your 3-minute time frame. All right. So let's go to 3-minute time frame. This is gold, please. It's because it's gold that make me to like, okay. So now if you look at on 3-minute time frame, look at what you can check. Your structure. Your structure, you don't need to know what structure is all about, but look at it. Here is H, that is high. Here is L, that is low. Here is high. So maybe as the market, maybe you were not there, so the market returned back here and get rejected here. So you sell, you put your sell here, and then put your stop loss above and target the next, all right, support. This is the next support. So assuming you got here, so you probably look at it. This is how you take forecasting measurements. Long, look at long position, short position. So you take it, if it's from here, this candle, and then you put your stop loss above, right? So let's see 120. So if you target here, it's not up to 1:2 risk reward. So sometimes you want to target 1:2 risk reward. So that's here. So you sell, market pull back, no problem, just allow it to be. So if you pull back, right, it doesn't matter. So all you want is that after it pull back, it actually sold. You can see it dribble here. So I'm very sure when you see another, a kind of rejection candle or, an engulfing candles. So like you may have added more position here depending on, your trading plan and all that. So you have here. So the market in a nutshell eventually delivers, and it delivers even more. Now we said, okay, what is my exit plan? My exit plan is number one, I can target 1:2 risk reward. Now, we're not using grid level. So number one, I can target 1:2 risk reward. Number two, I can target the next pivot point, that is the key levels. Number three, I can wait for a counter signal, all right, and valid counter signal for that matter. Look at the valid counter signal here: accumulation, manipulation, and distribution. So this is another entry. So you see that? So you're able to take a trade as simple as possible. Now on your 3 minute, even on 1 minute, you can take that trade. Okay, so you see that how you're able to navigate down. You don't just navigate down anyhow, but despite the fact that this market was a downtrend, you still, this is good. You are buying, you are still selling. See how the market came here. So the market was resistant here. Okay, so let's go. The market, you got another entry here. Now your stop loss will be below here. So how do you do it? You go click on that measurement, and instead of short position, you click on long position, not at this candle. Remember, we'll say confirmation is what? 3 candle pattern. So that means the third candle close and into the direction of where the market predicted will be your entry point. Okay. So your stop loss below this week. Okay. So below the week. So 1:2 risk reward is your first target. 1:2 risk reward is your first target. And then 1:2 risk reward was here. Then your next target will be maybe the next resistance at that skill level. Then next will be the next opposing valid signal. This is the next opposing valid signal. Why? So this is like in twofold. You have the accumulation, even if it's negative, it doesn't matter. Then you have, if you look at this market, look at something that happened. If you look at this market, if you don't wait for 3 candle confirmation, you will have definitely enter here and get stopped out if your stop loss is very minor. Why? The market got here. Immediately you take out maybe probably a liquidity here, it's going to print sell. Then you wait. The next candle printed and took out there, that's displacement. Now it closes, you wait. All right. So you wait for the third candle like this one to close towards the direction where the market asks you to sell. Then you take your trade and put your stop loss below. So afterward, what happened? This market came up massive as if, so what has it done? Displaced, right? Displaced. I think it even displayed this one. Yeah. So display that sweep of liquidity. And then the next candle close, very massive engulfing candle. So this is your entry because you are a confirmatory entry trader. This is your entry. So here, your stop loss above there, and then 1:2 risk reward is the next. So then, all right. So if you don't have trading plan, I think you need to learn more about what we call trading plan because at that point you DCA, right, so that you can ride the remaining position and all of that. So it is a very simple thing if you can pay attention. So the market come down here and create another momentum. So we have it here. So this market, I probably wouldn't take this market because it's too bogus for me. Because if you take it, you may not have where you are going to take up to, 1:2 risk reward. That's the different thing altogether. But there's something you probably wouldn't look at. There are other things you look at it now on 3 minute, meaning that this market is actually bearish, right? All right. So now looking at this, the market continues. So because if you want to enter this trade, it's not here, right? It's not here. Okay, it's here. Okay, yeah, it's here. You ask me why this market took out everything here. So that means you are entering here. Look at it. Entry. Your stop loss is going to be a little bit wide. So 1:2 risk reward. Unfortunately, I'm not sure it got there. So now the market continued. Now, look, what do we say? Your exit point. Who can tell us quickly? Look at it. What should be your exit point? You need to read up your conditions of rule of engagement. So on this scanner. So what do we say? Ordinarily, number one, 1:2 risk reward. Number two, next key level. Number three, when there is an opposing valid signal. So that means this trade you only exit somewhere here. Can you see that? You may exit here. Yes. Why do we exit here? Because the market has given a counter signal. Okay? A counter signal has come up, so you have to exit. Now, you can imagine that after you exit, you now take a trade here. At this point, and of course, your stop loss is here. Now, please, every time you put your stop loss and your take profit, so don't adjust your stop loss. You can always adjust your take profit by extending. So 1:2 risk reward, let's go. 1:2 risk reward here. Perfect. This is a real fantastic one. And now, because you have some positions and you have some open, now, if you look at the last probably one you open, then that means you're going to extend like this as the market continues to go. Do you observe something? There hasn't been any valid counter signal. Okay, this one seems to be valid. Yes, this one seems to be valid. So that means if you look at it, this 1,200 and something pips. So if you get over to this point, that is 1,000 pips. Okay. Now, so the market now has not stopped. It's still crazily bearish. So you can see this. Now, if you enter here, you are definitely going to be stopped out. That's what it means. Because if you enter here, right, this is accumulation, manipulation, and distribution. So if you enter here, you put your stop loss somewhere below here. This one must have entered your stop loss, or the market is still dragging and may eventually get stopped out because this is a very seriously bearish market. Do you get that? Okay, so this is how simple we ask you to follow the routine. Now, because this one, why do we go to as low as 3 minutes, 1 minute? Because this is gold. Gold has a lot of volumes, okay? So you can cope with whatever thing. All right. So now quickly let's go to other instrument like currencies, Euro USD, GBP USD, and all of that. Let's quickly go to Euro USD. Here we go to Euro USD. This is Euro USD. Now, if you look at it, I think I sold today. All right. So now what happened? So we'll go on daily. Let's go on daily. So on daily, what really happened? This market is a bit confusing, right? Because this was bearish candlestick. Now, the following day, you actually expect, because this one closes below this, you actually expect this market to go bearish. So, but unfortunately, it did not. So, you have to go to your 4 hour time frame to see the structure. So, here, this market closed bullish yesterday. So, when you come today, so you will expect that the market continue to go up, right? So unfortunately, the market was in this cloud. So you go to 4 hours quickly. So in getting to 4 hours, so what do we have? Getting to 4 hours, okay, we'll have a continuation of yesterday's sell. That's what happened. But this was yesterday's sell, right? So you are going to go to 15-minute time frame. Okay? So you're going to go to 15-minute time frame because if you look at it today, so the present day, so let me take off this. So the present day is here. Okay. So let's go to 15 minutes, but just like a continuation. So let's go to 15 minutes. So you go to 15 minutes. So what do we have? So you go to 15 minutes, what do we have? Perhaps maybe this is where market is, and then he asks you to buy, you buy, and all of that. The market got down here again, and then he give a sell signal. You sell, and all of that. Now, this sell, so the market delivered to your profit. Okay, I think with 2 ticks, and the market is still went back and then return, as it were. So sometimes you can go to as low as 5 minutes to find a very prime entry. So understand why you go to all those low time frame to find a prime entry. Okay. So why a prime sniper entry? So look at it. Accumulation, manipulation, distribution. So this is your entry targeting this point. Can you see that? So that means you look at, let's look at it, and long position, take your entry at this close of the third candle, then your next take profit is 1:2 risk reward. Okay. So that's your 1:2. Don't joke with that, your first 1:2 risk reward. Then the next key level. So you see that the market got there, and then what did it do? It creates another sell signal. So you take an entry, accumulation. So that means the close of this candle. For me, I will have taken this because that's a rejection, but nevertheless, just be conservative. So take it here, then your stop loss above here, and then where's your take profit? First is 1:2 risk reward. So with that is done here. And then the market again continue. A counter signal. Can you see a counter signal? Yes. This is a counter signal. Look at it. Then you take a long, right? This is your long. Your stop loss below here. Excuse me. All right. All right. Your stop loss, that's about 15 pips. Ratio 2 risk reward. That is done here. Okay. So this is okay. So look at this now. Look at Euro USD again. There was a buy here already. There was a buy here. So stop loss will be here. Take profit. 1:2 risk reward. Yes, there was a buy here. Look at it. So you can see. So you continue to trade like that. So it makes a lot of sense. Now, if the market give you room to travel more further, so you can now be expanding your travel more. Okay, you continue to expand more. So maybe it's a good long trend. So a long trend like that will give you more opportunity to buy in all of that. So look at this one. Okay. So the another thing you should understand is that since the market is a downtrend, this is a break of structure, this is a high, then this is a low. Then if I enter in such case like this one, I want to look at where's the potential place where the market will stop and start going down. So take it from here like this and take my Fibonacci. So I'm not telling you to do that because you may not know. So just to understand that you first of all go to your what's it called? You first of all go to your daily time frame. Okay. So let's go to this one. Amazing. Okay. Right. Amazing. So yesterday was bearish. Okay. So you expect that, okay, because it closes below this, so the market will. So that's why you can see your scanner working for you. So now you have checked the daily, and then the market you expect it to be bearish. Then you go to your 4-hour time frame. I beg your pardon. If you look at it, this market sold down here. Now look at the massive candle cell. So now if you go to your 4 hours, now on the 4 hours, you see that, okay, this was yesterday. So this was yesterday. This was today. Okay. So let's go this way. So go to 15 minutes. Okay. So in going to 15 minutes, it actually is structure. So look at where the market came down to. Okay. So, but did it give us signal? Not at all. Okay. So you want to go to 5 minutes. Perhaps we go to 1 hour. So let's go to 1 hour first. Okay, so this is just like the continuation, right, of yesterday. Massive one, very powerful. 1 hour, very powerful. So here you go, your 5 minute time frame, and then you find a trade. Let's look at it from here. Now, this is a nice entry. So probably you may not be online. And then you take the trade, then 1:2. Then the next one, you printed this one, it's another entry, a sell. Wow, this one you probably may sell and then will not go far. So you have a sell down to this point, make a lot of sense. And then you have this market now driven to this point. So he has asked to sell. This didn't close below this. So it may not be a very good sell, as it were. All right. So this is how you trade this market with this scanner. Very, very simple. You don't have yourself to be stressed. So you just allow the trade to run, right? And then you are fine. Can you see that? So it's important. So you need to understand the step. Very simple step. So you go to your daily time frame to see the momentum of activities, and of course have an idea of the bias of the market. And then you go to 4 hours, get the structure. You see the signal of 4 hours. You go to 15 minutes to take a fast entry. You go to 1 hour. You go to 5 minutes to see a fast entry. And once you enter, put your stop loss accordingly, and then your take profit accordingly. And that's all. So you have no much business, you have no more stress, and that's why we say we have to do this to give thorough explanation. Step down to this, step down to empty 5 minutes or 15 minutes or 5 minutes respectively to see a repeat of 4 hours or 1 hour respectively for sniper calls, valid with 3 candles and confirmation, or 3 candles confirmation, or change the state of delivery. So enter trade and put stop loss. So I just told you this. Very, very simple. So that's one of the lovely things about this space. All right, make sense? Make a lot of sense. Okay, so this is how it is. And so you find a trade, you take your profit. I always say take the profit from the table, right? Don't leave it there. Take the profit from the table, right? So that sometime you can ride for a very long time, and that sometime you can take a shorter time. All right. So this is for today traders. So if you use swing trade, of course, we want to go on daily and then check the 4 hours and probably enter in 1 hour or 30 minutes. All right. So that's how it is. Okay, so this canal is very powerful. I won't lie to you. If you pay attention and use it accordingly, then you're going to be smiling, seriously. Because you'll be cleaning the market back to back and making a lot of money. All right? I think it does make sense. Oh, yeah. So thank you very much. And watch again and again to practice. Bye for now.